Hi and welcome. Today I'm going to be talking to you how to invest in stocks as a young person who is under the age of 18. So let's get into it. What we're going to be learning today. We're learning what is and how to create a tax file number, about minor trust accounts, about tax returns, what are capital gains, what are dividends, investment strategies, and stocks to invest in, also my experience. So what is and how to create a tax file number? The Australian Taxation Office, or ATO, collects taxes to use them for government purposes, like the military, medical, and roads and stuff like that. A tax file number, TFN, is a personal tax reference number. It is free to get a tax file number, but you will need to be 15 years or older, have an Australian passport, be an Australian citizen, and have one other identity document. The tax file number is used when investing to pay capital gains tax when you sell a stock or to tax dividends. Dividends and capital gains in Australia are considered as income. You'll have to declare any income made by investments on your tax return. So now we're going to be talking about minor trust accounts. So what is a minor trust account? A minor trust account is an informal trust account which allows parents to hold investments on behalf of a beneficiary or the child until they turn 18. When the beneficiary turns 18, the investments can be transferred to the child without having to pay capital gains tax. So that basically means the parents hold the investments in their name, but it's the child's investments that they're holding in their name because the child can't invest because they're not over 18, and then when they turn 18, they can be transferred into the child's portfolio without having to pay tax. So how do you create one? A few providers which offer the best accounts are CommSec and SelfWealth. You can set up an account with either one adult or through a joint account. It may take a while for it to be set up and processed. You will need a tax file number and some more ID. After you create an account, you can deposit some money into the account and get investing. So what are tax returns? A tax return covers the income earned from July 1st to June 30th. Any income will need to be declared in a tax return. Since you're under 18, your income is managed, your portfolio is managed by your parents, and your income is managed by your parents. So you can put it on that their tax return or your tax return, whichever you choose. When you turn 18, you will have to do your own tax return though, when they get transferred into your. So what are capital gains? Capital gains are when the price of something goes up and you make a profit. In Australia, capital gains are taxed as income. If the stock price goes up higher than when you bought it, you'll make a profit if you decide to sell it. Say if you have a stock for $10 and the price goes up to $12.50, you may have made $2.50 in capital gains. So what are dividends? Dividends is income that a company pays out to a shareholder for holding onto their stocks for a period of time. These dividends are usually paid out monthly, quarterly, semi-annually, or annually. The amount you can receive from dividends depends on dividend yield compared to the stock price. So if you invested in one stock that's worth $60 and the company pays out an annual dividend of $3, then the dividend yield is 5%. So now I'm going to talk about investment strategies. I recommend that you focus on passive investing for the long term by buying small amounts of a stock regularly, like monthly, quarterly, even weekly if you want to, and hold it until you are near retirement so you can retire with more money. Or you can purchase stocks of a company that pays out a good dividend yield consistently, like Coca-Cola, and receive a more regular income. Passive investing is probably the best for teenagers, as it doesn't require as much work as active investing, and there is a lot less risk in the long run. So here's some stocks I recommend you invest in. I recommend investing in safe stocks that have a good return over the long run. If you are comfortable and know a lot about a company, then go for it. But don't be too risky if you want to build your wealth over a long period of time. Some companies for passive investing I recommend are Apple, Amazon, the Vanguard Index Fund, or the ASX 200. For dividend investing, I recommend companies like Coca-Cola, Starbucks, and Pepsi. So throughout the project, I've been pretending to invest in 9 different stocks. I checked them every day we had class, and that was over a period of 10 days. So the stocks I invested in are Apple, Google, Tesla, Bitcoin, Lockheed Martin, Boeing, Amazon, the S&P 500, and the ASX 200. Some of these companies I invested in for fun, and I'm not recommending you do it yourself. Overall, my stocks went up a total of $3,100.37, which was 6.65%. If the market stayed the same growth, my stocks would have gone up $5,658,175.25, which is still 6.65% in 50 years. If I invested $1,000 in each for these 10 days, I would have made $66.50 in capital gains income. I found the stock with the biggest growth was Apple, and I found the stock that was the most consistent and reliable was Boeing Aerospace and Apple. Now, I'm not a financial advisor, and you should not invest your money into stocks unless you have done lots of research on the company, are confident in your decision, and are okay losing money if the stock goes down. Remember, the stock market is unpredictable, and you should not try to time or predict the markets, as you'll just end up losing money. Thanks for listening today, and I hope you get something out of it.